Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: financial topics, commodities, and or wealth building topics. So we're going to dive in there, take a look, see what people are sharing. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com, I dive into all of these topics that people want to discuss, what they want to learn. I will try to teach you how to read the charts, teach you the mindsets and psychology that are needed, what is a risky versus a or I should say less risky opportunity, what are great opportunities in the market, what do they look like, and you can see me deploying what I know to accumulate a portfolio yourself. So you can see me build portfolios. You can see what I'm doing and what I'm buying and the companies. And I think there's a ton of value there. The reason I think there's a lot of value is because I like to think that I can pick companies very well based off of the technicals and the fundamentals. That gives me a huge advantage versus others that only look at fundamentals and those that only look at the technicals. So I'm a hybrid investor. So coming down, finance lot, I should say. Delinquency rates on all loans. Looks familiar, doesn't it? Well, you have to keep in mind when this was bottoming and very low here, that was actually when commodities were going gangbusters. So I'm curious to see how this will resolve itself um, on this, and if we're going to come back down or if we are going to launch. That is the delinquency rate on all loans. And I don't think we've got a problem in the housing market. Foreclosures are pretty low. There's a ton of equity in the homes. We still have relatively low inventory levels. Now, I would change my mind if inventory levels go above 6 months is about an even market. 8 months, you are in a buyer's market. So I would change my mind if we were to get to those levels. And foreclosure started to go up and we had increased forced selling. But right now we're at very low levels, so we'll see how this plays out in terms of delinquency rate on all loans. Come down to Vancouver Island guy, just a reminder of West Texas Intermediate oil seasonality after earnings. Every year is different, though this is the 20-year trend. Most Canadian energy is around the last week of October, where we see this roll over for a few months. So we generally get a weakness late October through November and into December. Just as an FYI to everyone, oil seasonality. Now, what am I going to be doing? I'm going to be looking and shopping around in this area over here for potential investment opportunities when they pull back. And that's what you're supposed to do. So keep this seasonality in mind. It doesn't mean it will play out exactly like this. And we have to watch. It just means historically we see weakness in the fall months, early winter. Short story here, according to Adam, and I wanted to make some comments on it. So here's his short story. 1 year return is down 19%. Cenovus is down 2 years, 0.82. And 10 years, it's down 12.5%. It says CVE, pathetic creators of shareholder value. Come on, guys. Does he really believe this? This is an oil company. Oil went up a lot during this time frame. Up, 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 up. And then we've been going sideways. Cenovus is actually an incredibly good company. It is incredibly good. And what I think is going to do going forward is going to absolutely destroy the markets in terms of other, when you compare this against other areas. Could there be a short-term pullback if we get a recession or a slowdown? Very well could. But with a huge but there, if oil goes up, and this is highly leveraged to oil, then the stock price will go up. So Cenovus and a lot of the oil companies, not just CVE, but a lot of the oil companies, they follow the price of oil. And you shouldn't be mad if an oil equity goes down when the price of oil goes down. I mean, literally, commodity companies and commodity equities are, for the most part, just a leveraged way to play a commodity price. That is all it is. And the more leverage the price, it generally means that you've got a higher cost producer or a developer or an explorer, depending on what they hit. So I don't know why anybody would be mad about this. Just go look at the oil price. And CVE is just going to be somewhat leveraged to the oil price. And in fact, I think it's been outperforming oil over this time frame, which is actually a good thing. Uncle Milty's ghost. So I sincerely hope people pay very, very close attention to this chart. The rubber band always snaps back. This is Nvidia, 11.7% of GDP, going straight higher. Cisco, which was the last big bubble in 2000, was 5.5% of GDP in the year 2000. So Nvidia has claimed an even larger stake of the GDP than Cisco did at the peak of 2000. Now, is this a bubble? I don't know, guys. I would tend to think it is. Yes, that's my opinions around it. How do I know it's a bubble? Well, something's going to probably impede its growth. Maybe it's a lack of energy. We have a lack of electricity that will slow down the chip makers and AI and data centers being deployed. Maybe, maybe not. We'll see. Quote from Warren Buffett: "You have to buy businesses, and you have to buy them at attractive prices, and you have to buy into good businesses. That advice will be the same as 100 years from now. That's what it's all about. Buy good businesses," is his opinion. Nostra, House of Gold, says they are desperately trying to stop the breakout in silver. The end is nigh or near. Well, I don't know if they're trying to do that or not. There is resistance at 3250. Whatever's going on at 3250, there is a war going on up there. I don't know who they are, but I would guess JP Schlagen, but who knows? Rick says home builders have roughly the same number of unsold finished homes per community as in 2012. Some of the rise is due to a strategic shift to more speculative or spec construction. Build it before you have a buyer. Sticky 6% plus mortgage rates and resale competition are also part of the story. So number of unsold finished new homes per community. And this is, I think, measured in months. So it's about 2.4 months. Remember those guys that are showing like 9 months of inventory of new homes? Well, they're not taking into account the finished homes. The finished homes are roughly about average, and the average is around 2. So it's a little bit above average, okay, and maybe it does slow down. Maybe it speeds up if interest rates were to pull back. We'll have to wait and see. When interest rates pulled back, look at that move lower. We just ate through all the inventory when interest rates pulled back. And that was in February of 2020, right after March when they lowered interest rates. Everybody bought a bunch of new homes, apparently. A bunch of new homes were sold. The Gladiator, gold cracks 4,000 in Australian dollars, win 5,000. Gosh, have you guys looked at some of these charts in other currencies? Oh, it's going vertical in like everything. Go look at gold in the Japanese yen. Talk about a bull market or a currency that has a lot of problems. But yeah, we're seeing gold just rip it against a wide variety of currencies. Barry Ritholtz says markets are very effective at pre-pricing information that will happen in the next 3 to 30 months. They are not very interested in things 10 to 15 years from now. And they are not really interested in things next week, says Ken Fisher. Do you guys agree with that? I would disagree. I don't think markets are very effective at pricing really anything. And the reason I say that is because of the emotion that the markets undergo of the participants. And we see when the sentiment gets negative that the pricing is generally underpriced or undervalued. Not all the time, but it can be. And then when the markets are all giddy on it, everybody piles in and it becomes overvalued. And that could be even in the short term. And you get these swings of prices in a single year that might swing 60, 70, 80%. Does that show an accurate reading of the fundamentals? A 60, 70, 80% swing in prices? I don't think so. I don't think that's accurate. And that's the very thing that I try to take advantage of is the sentiment shifts and the mispricing given the fundamentals. So I think that it's not a very effective way at pricing the market. And that's where you get all the returns. Is you take that miss out, I don't know, whatever you want to call it. You take that sentiment shift and use it to your advantage. Here's XLRE working its way on up for real estate, at least from the stock price. And XLRE versus SPY, you can see we're getting a little bit of an outperformance here recently. So that's looking good. Best of philosophy, here's a quote. You become what you give your attention to. Totally agree with that. Another way that you could say this and that you'll notice it is if you make a comment to somebody and you say, well, you notice all the yellow cars on the road, which there isn't many, but you're going to start to notice all the yellow cars when you talk about it. Or if you say, look at the lines out Chick-fil-A, and then you start looking at every Chick-fil-A and all the lines that are, the line of cars outside of it. You notice the things that you pay attention to. And here, if you give your attention to something, you're learning about that thing that you're giving your attention to. What I've done is I used to give my attention back in the day to work. Work being my 9 to 5 job. I was in engineering, and I would, think about that a lot. And then eventually, when I started making more money, I would save a lot of money. I tried to balance work and becoming a better investor when I was in my 20s and 30s. And, there's a lot of demands in your 30s when you have kids, you're working, all of that stuff. But now that the kids are older, I am diverting all of my attention to investing. And it makes a big difference. It does. It makes a big difference as you gain and put more attention to it and you learn and refine your approaches. So I guess I'm becoming a full-time investor. That's what it is. Because that's where my attention's going. Reads with Ravi, he says, one day you will wake up and there won't be any more time to do the things you've always wanted to do. Do it now, says Paulo whatever. Here's something that I used to follow. So I used to follow T. Boone Pickens. He's a oil and gas investor back in the day. I followed a lot of those older guys. And he had an interview. And when he was in his interview, one of the guys said, hey, T. Boone, would you trade everything that you own to be like 25 again? He's like, yes, I would. So think of it this way, guys. A lot of these guys, they ask the older guys who are very, very wealthy. They've asked them, if you could be young again and give it all up, would you do it? Almost all of them would say yes. And when people are young, they want to make all this money. They're in their 20s or 30s, and they want to make all this money. Think about all of the people who have all the money and what they would do and trade their life to be 20-something years old again. Think about all that. Think about maybe that that getting rich isn't the important thing. And again, the quote, one day you will wake up and there won't be any more time to do the things that you've always wanted to do. Connect the dots. Google announcement a few days back, Microsoft with 3 Island, Ellison, Oracle with 3 SMRs, Apple and Meta are next. So a lot of these announcements with nuclear and uranium. Uranium is tied to nuclear. So nuclear is definitely where we have to go. In the short term, worldwide, I think we're going to burn a lot of natural gas and coal in the meantime. So energy is the theme. energy is going to be huge for investment over the next decade plus, probably for the next 20, 30 years. You could probably become an expert in energy and just absolutely kill it. Absolutely kill it. Now, if we don't have the energy to support, we could see quite a bit of inflation. That's something else. Now, there's going to be a lot of support that energy needs too. A lot of electrical power lines will need to be installed. And what are those made of? Those are the things that might be good investments, is what I'm saying. Cornerstone, for 4+ years, the IEA's oil supply demand forecast has been horribly wrong. In today's client report, we said oil demand growth is on its last leg as green energy displaces oil as only a bedtime story. So the end of the oil age beckons for top forecaster. The international agency paints a bleak picture for crude producers as demand nears a plateau and an age of electricity dawns. I don't think that is going to be 100% accurate. We have a lot of work to do. There was a guy who worked, I think it was MIT or Caltech. I can't remember which one. They asked these guys about China and India and all of these things. How could we save the climate? Something on the lines of that. They said, well, if you look at history, you have to kind of go through and burn coal and oil and natural gas and finally get to nuclear and some of these higher order power generation. They said the best way to do that is to burn it as fast, like to go through the cycle as fast as possible. So you have to get them through fossil fuels and burn through as fast as possible to basically slingshot them to nuclear or a better form of energy, a cleaner form of energy. So I don't think they're at that stage yet. I think we are going to build a ton of coal power plants, a ton of natural gas power plants, a ton of nuclear too, and we're going to burn a lot of oil in the midterm here. I don't think we're peaking for at least another 20, 30 years. That's my guess. Breaking home buyers, U.S. housing has reached its most unaffordable level since the mid-1980s, according to the National Association of Realtors. And there's your housing bubble, and here we are down here at an unaffordable level. How long are we going to stay there? We'll find out. And maybe interest rates will change that. XLF, financials. So bull markets solve the problems. The illusion that complaining about a problem solves it is one soul-sucking reality for the unenlightened or unenlightened. XLF moving higher. When it goes really higher? Bull markets and housing, if you guys look. So when financials start to lead, when they start to lead against tech, that's your housing bull market. Here. So this is more evidence of that occurring. And remember, we looked at the real estate stocks, XLRE or whatever it was, and that was going up. Yep. Put it in the bullish bucket. We've got transports ETF breaking to the upside. He's got a shoulder head shoulder. That's usually a bottoming pattern. They don't usually look like this, but we're up against resistance. We're breaking out of resistance, so it doesn't really matter. We're moving on up. Martin says, meanwhile, India is the world's third largest oil importer. India's Russian oil imports rise by almost 12% in September from August. Data shows, so New Delhi, India's crude oil imports from Russia rose by 12% to about 1.9 million barrels per day in September, accounting for about 2/5 of the South Asian nation's overall crude imports in the month. Tanker data obtained from industry sources. Overall, refiners in India imported a total of 5 million barrels per day of crude oil in September, marginally higher than in August, and about 8.5% more than the same month a year ago, the data suggests or shows. Martin says the most hated sector, so energy ETFs just saw the second largest weekly outflow in 7 years. So we had that in 2017, 2022, and where we have today. We've got an explosive setup according to rock bottom entries. Final call in platinum. I would agree. We do have an explosive situation lining up in platinum. And I think we could have a big move in platinum. And the ratios all suggest that we are coming from unheard of anomalies in history when you price platinum against gold, platinum against palladium, and platinum against silver. So I do think platinum is going to take off at some point soon. Novel says, pick an industry where you can play long-term games and win long-term games with long-term people. That's what I'm doing. I'm playing energy and precious metals because I think there's going to be problems in currencies and potentially bond markets. And I think there's going to be a long-term demand for energy that is going to go vertical. Vertical. Yes, I said vertical, like exponential move, not linear. North Star says capital rotation bingo. If you're not playing it, you're not going to see what's coming. Microsoft is breaking down versus gold. And that's where your financials also come into play. Your financials start to outperform the tech sector. That's your real estate market. Yep. What's your debt to household income ratio, take home pay after taxes? Mine is 3.5 times. So his debt is 3.5 times his household income ratio. I don't have a ton of debt, guys. So my debt level is less than my income. I would guess something like 0.7, maybe 0.6. I don't know. I've never really done the math, but it is less. If you're looking for an ultra bullish silver chart, we've got you covered. According to Shadow Stats inflation adjusted calculations, silver's all-time high would be an incredible $1,800 per ounce. That is adjusted to the US CPI adjusted shadowstats.com. The other adjusted price looks like it's close to about 200. If you use the United States CPI adjusted official ones, because you know how they do all the adjustments in there. Another quote, most people are too fretful, they worry too much. Success means being very patient, but aggressive when it's time. And we're going to end on that quote there. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. Mayday coupon code is still active, and we'll catch you next time. This is Finding Value.